Welcome to the Tract-PIE Executive Overview video. Our goal over the next 10 minutes is to provide you an appreciation of who we are, what the capabilities of the Tract-PIE system are, and how you can benefit from them. The Tract-PIE team markets a suite of financial analysis systems to the real estate industry to quickly, easily, and accurately generate cash flow and perform analyses for residential tract and/or land development projects, as well as income-producing properties such as apartments, office, and retail buildings. We have been serving the industry since 1990 and support more than 800 separate companies worldwide. We have earned a reputation for providing flexible, comprehensive, easy-to-use systems that are professionally supported and continually enhanced. Through the cyclical ups and downs of this industry, the Tract-PIE suite of systems has been a dependable, reliable, and constant analysis platform in a tumultuous industry. The Tract-PIE system would typically be used to generate a monthly cash flow projection and financial analysis of a project that entails the purchase and development of land and then the construction of model and production homes, followed by their sales and closings. The resultant reports display monthly cash flows before and after debt service with project internal rate of returns and profit margin, as well as loan flows and equity projections with internal rate of returns to the various partners, a profit and loss statement, and balance sheet. Much flexibility is provided to display time periods as months or rolled up into quarters and years. The reports are professionally looking, suitable for presentations to management and potential lenders or investors. Why use Tract-PIE if you have a spreadsheet system? While spreadsheets provide a lot of flexibility, they are not easy to develop. They are time-consuming and they are error-prone. While our users range from the largest national home builders and land developers to small one- and two-man shops, our typical user is one who is wearing multiple hats and is working with lenders and investors and doesn't have the option to have a spreadsheet guru on staff or to be one themselves. Our users like the fact that all assumptions are input on well laid out screens in an easy-to-follow, logical order, from project descriptions, expenses, loans, and equity participation. Calculations are automatically made when reports are generated. Users have the capability to customize the reports and even export them to a spreadsheet to make them fancier. Cash flow projections for numerous projects can be consolidated effortlessly into divisional, regional, or higher-level reports. Who has time or interest in creating elaborate, complicated spreadsheets that can only be used by a limited number of people in the company? Between the well-written user manuals, on-screen tips, and unlimited telephone support, Tract-PIE users are installed, operational, and productive in a short period of time without expensive, time-consuming training classes. There are three separate ways to input your assumptions with Tract-PIE: the quick feasibility mode, which is like the back-of-the-envelope approach, the all-screen input, which is more detailed, and then the detailed input that provides the ultimate level of detail. Each of these input methods build upon each other so that you do not have to re-input your assumptions. Our goal for this video is to concentrate on the quick feasibility mode. The quick feasibility input mode allows you to easily input summarized assumptions on a limited number of screens to generate reports displaying the potential of the deal, accompanied by internal rate of returns and profit metrics. The all-screen mode, which is discussed in another video, provides flexibility for more input for different floor plans, expenses, loans, and partnership structures. With this project, we are forecasting an analysis period of only 60 months out of a possible 240 periods or months, barely challenging the system. On this screen, we have 76 production and 4 model units being sold for $350,000 each, with about $24,000 in anticipated upgrades and options. While we started our analysis on January of 2010, our grand opening is forecasted to be in September of 2010. We anticipate selling approximately 2 homes per month. We are assuming that the direct construction costs, sticks and bricks only, will be $75 per square foot for an average home size of 1,970 square feet. We will start construction of the model units in May of 2010, and it should take about 4 months to build the model homes. While the user has a lot of flexibility to schedule the construction starts in any way they want, manually or automatically by phases, in our case we are linking the starts to our sales, so as we sell a unit, we can start building it in the same month or a month or 2 months later. It should take 4 months to build each home. While there are more assumptions related to the expenses and loans, let's generate a report showing what's happening. The top section of the report is our sequence of events, displaying our monthly sales, construction starts, completions, and closings. As we close units, sales revenue is produced along with other revenues for options and lot premiums and sales-related expenses. While we have not discussed the input yet for expenses, you can see that we have costs related to the takedown and development of the land. Direct construction costs have been automatically calculated based upon the schedule starts and a table of monthly disbursement factors for different length construction periods. Taxes, permits and fees, and overhead are all dispersed based upon user assumptions. Let's return to the input screens to discuss more assumptions. On this screen, we've assumed that the option costs are 75% of option revenues and that warranties will be $1,500 per close and commissions will be 5% per close. While the land purchase can be described various ways, we assume that the sales price will be $2.75 million. We have assumed that both off-sites and on-site expenses will be dispersed using these monthly percentages displayed beginning on these dates. Remember, this is back-of-the-envelope approach. We're not trying to describe everything with a fine-tooth comb. We can input up to 5 user-defined expenses such as permits and fees, overhead, and others if we want. We have a lot of flexibility regarding how you describe these expenses. On this loan draw assignment screen, we are assigning expenses to be funded by specific loans. The numbers at the expenses relate to specific loans. Notice at the bottom of the screen that 1 represents the land or purchase note, 2 is the development loan, and 3 represents the construction loan. In this example, the land purchase is not being funded by a land loan, but fully out of equity. This is the input screen for the land loan, but we didn't use this loan to fund the land, so we can skip this screen. You only need to input assumptions for the applicable items. For this example, the acquisition and development loan, or A&D loan, is funding 80% of the development expenses, or 75% of the sales value, whichever is less. Interest is 8%, and we are having the system automatically calculate the interest reserve. The repayment of the loan can be handled multiple ways, such as from the funding of the construction loan, either on a par or accelerated basis, from closes, from excess cash flow, or in this example is 75% of the sales price. There's a lot of flexibility available to accurately describe a loan. The construction loan is very similar to the development loan. In this example, it is funding 80% of the costs assigned to it, or 75% of the sales price, whichever is less. Again, the interest is 8%, and the interest reserve will be automatically calculated because we input a 1 to calculate the reserve. You can see that this loan is to be repaid from closings on an accelerated 110% basis. Let's generate a new report and concentrate on different factors. You can see the total net receipts are about $29 million, and the total disbursements are about $23.6 million. This highlighted section is a summary of all the loans, but there is a detailed loan flow schedule for each loan a little bit later. What is not funded by the loans and cash flow is automatically funded by equity. In this example, we need about $7.1 million in total equity, but the system has displayed it as it's needed over time. The equity is eventually returned along with profits of about $5 million. Internal rate of returns are calculated before loans as well as after loans. These are key factors in determining the feasibility of the project. The report also displays the high watermark for costs outstanding, loans, and equity. It's important to understand what and when you will experience your greatest exposure to these items. Below this section are the loan flow schedules for each active loan, detailing the drawdowns on the loans and the repayments. You always have an accurate projection of the interest reserve and the loan balances. The quick feasibility module provides for one source of equity, while the more detailed all-screen input provides for more flexibility. Remember, with the quick and dirty approach, we're just trying to quickly determine the feasibility of the project and whether you want to analyze it in more detail. The P&L report projects the monthly sales less capitalized cost of sales less direct expenses to calculate profit and profit margin. The balance sheet is also displayed next, showing the assets and liabilities. While this cash flow report was calculated on a monthly basis for accuracy purposes, it is very easy to roll up the months into either quarters or years or even a combination of both. You can even display just the desired sections of the report rather than all the sub-reports. Another very meaningful report is the Executive Summary Report that is a professional-looking one-page snapshot of the important factors of the project. The same reports are generated with the all-screen input, but with more detail, showing total sales revenue, all the loan assumptions, equity participation, profit margins, and internal rate of returns. This is a great report to use within the company or shared with lenders or investors. Another nice report is a budget analysis report. While more meaningful with numerous floor plans, this report displays average revenues and expenses by plan type, total revenues and expenses, and then more metrics and ratios as rates per square foot or percentages of sales and expenses. All these reports are calculated at the same time, so they're always in sync. That doesn't often happen if you're using a spreadsheet system. Too often you can make a change in one report that is not copied over to another report. Another powerful capability of the Tract-PIE system is the goal-seeking function, which it backs into the value of the land based upon attaining a return such as an internal rate of return or profit margin. In this example, we are looking at attaining a profit margin of 15%. What should the land be purchased to achieve that return? The system quickly displays the results of $3 million, and to prove the results, here's our targeted profit margin of 15%. Sensitivity analysis is a vital aspect of any project to quickly display the impact of changes given various major variables on the profitability of the project. In this example, let's look at the impact of the project based upon changes in home sales prices and absorption or sales. You can execute up to 12 scenarios at one time. Let's increase and decrease the average sales price by various percentages and input applicable changes in the monthly sales rate. As we calculate the matrix, the system displays a side-by-side comparison of the base case and the different scenarios with key factors such as internal rate of returns and profit margin. A very powerful report which took seconds to complete. How long would it have taken using a spreadsheet system? All this analysis and report generation was completed using the back-of-the-envelope approach. Again, we summarized the key assumptions on a limited number of input screens to quickly analyze the feasibility of a project and determine if it passes the sniff test. Within a matter of minutes, reports were generated displaying monthly and total revenues, expenses, loans, and equity along with internal rate of returns and profit margin. If the deal doesn't pass the initial hurdles, you can quickly move on to review another potential deal. However, if the deal appears promising, you can automatically transfer the assumptions to the all-screen mode for performing a more detailed, in-depth analysis. Using the all-screen mode, you can expand your product mix to include up to 10 plan types, apply more expenses, miscellaneous revenues, miscellaneous incomes, loans, and detailed complicated capital structures. All this was accomplished within minutes, requiring no changing of cell-by-cell behind-the-scenes calculations and report formats, with all the assumptions transparent and readable so that nothing is hidden or overlooked. Tract-PIE is professionally supported, continually updated with new enhancements. Life is too complex and unforgiving to use a spreadsheet for this type of analysis. Supported and enhanced limited by your knowledge of spreadsheets and time to use them. To learn more about Tract-PIE and our other systems, or to schedule a personal demonstration of these systems, contact us at 800-774-5077 or visit our website at www.tract-pie.com. We look forward to helping you make profits, not spreadsheets.